Urgent news just in. The winter fuel payment that was means tested for the first time last winter is to be reinstated as a universal payment for all state pensioners this coming winter 2025. But for those who earn over £35,000, the payment will be clawed back through the tax system. I want to talk to you about what it means, how it works, and crucially, is this actually an improvement? So first of all, the winter fuel payment is a payment that's long been made to state pensioner households of £200 for households with under 80s in and £300 for households with over 80s in. This winter, the payment will be automatically made to all state pensioner households, though they will be able to opt out, which you might want to do if it's going to be clawed back anyway. Then, where somebody earns over £35,000, it will be clawed back either through PAYE or the self-assessment system, i.e. through the tax system. Now, they have said that this shouldn't push anybody into self-assessment who wouldn't be self-assessment anyway, which is very important because self-assessment is complicated, so you don't want to have to be forced into the self-assessment system unless it is necessary. Crucially, and this is the one thing that has surprised me about the announcement because much of it was flagged in advance as the suspected way they would change it. The way it will work is, even though the payment is a household payment, the tax clawback is an individual tax clawback. So give me give you an example. You've got a household that's due to get £300 with two state pensioners in. That £300 for the clawback is treated as £150 and £150. So if this person earns over £35,000, they lose it. If this person earns under £35,000, they keep it. They still get £150. If both of them earns over £35,000, they both lose it. And if both of them earn under £35,000, they both keep it. Now that is a good system compared to what we thought was going to happen, that it would be something akin to the child benefit higher income tax charge, where the whole benefit depends on the highest earner's income. And in fact, I think now we know this system can be done, there's an argument for lobbying for that change to be made for the child benefit system too. But let me keep this onto pension credit. Do I think this is an improvement? Spoiler, yes, very much so. So the two big things I have been campaigning on, the problem with the way the means testing was done, are first of all, the threshold set last winter at £11,600. A single pensioner earning under £11,600 was just far too low and left many people on still very low incomes earning just above the threshold missing out. Moving it to £35,000, which is much more equivalent to average income, is a big improvement and should lead to 3 in 4 state pensioners getting a payment according to the government numbers. So yes, that's worthwhile. The second one, and the one I've been most verbal on, is that the method of means testing that was put into place was based on pension credit, which has long been a critically underclaimed benefit. So linking winter fuel payment to pension credit was, in my view, flawed. And even now, there are 700,000 eligible state pensioners on very low incomes who should be getting pension credit who don't, which also means they miss out on winter fuel payment. Well, that's gone, because now every state pensioner household will get this by default unless they choose to opt out of it, which means those vulnerable households who are least likely to act will automatically get it. So for that, I'm very grateful to the Chancellor for listening to me and the many other people who have been campaigning on this. This is a very big improvement on what we already had. And it does mean there's still a means test in place. And many people have said they don't want millionaires and billionaires to get the winter fuel payment. Well, they won't get the winter fuel payment. They can either opt out or have it clawed back through the tax system. But it means far more pensioners who are struggling with still high energy bills will get this payment. I feel relieved. That's my instant reaction to the news. Relieved that there's an improvement. I hope that explains it to you. Obviously, this is just based on the initial details that are in. If anything more comes to light, I will be putting that out there in all my channels.
In a move hailed as both compassionate and cunning, Chancellor Rachel Reeves has announced the return of universal winter fuel payments for state pensioners starting in winter 2025. But with a catch that's already stirring debate across Westminster. Under the revised policy, Every pensioner will receive the full winter fuel payment up front, a reversal of the tightening eligibility rules introduced over the past decade. But higher earners, those making over $35,000 a year, will have the full amount reclaimed through their income tax. The policy, which aims to balance universal access with progressive taxation, was unveiled shortly after Reeves' Sunday interview, where she promised that Labor would govern with both fairness and financial responsibility. At first glance, it appears Reeves has revived a popular benefit while avoiding the political blowback of overt means testing. But the real ingenuity lies in the mechanics. Rather than forcing pensioners to navigate bureaucratic hurdles or disclose their income in advance, the government will treat the payment as universal at the point of access, only to reclaim the funds automatically later from those with higher earnings. It's a strategy Reeves described as compassion without waste. This is about trust, Reeves told journalists. We're trusting pensioners to receive the help up front, but also trusting the system to ensure those who can afford to contribute more will do so through the tax they already pay. The policy received an early endorsement from Martin Lewis, the UK's leading consumer finance expert, who called the approach a practical innovation in how government manages benefits. This is smart policy design, Lewis said on his social media channels. It removes the stigma and complexity that stops many vulnerable pensioners from applying for support, while still making sure better-off recipients aren't walking away with taxpayer-funded handouts they don't need. Lewis noted that nearly 1 million eligible pensioners fail to claim key benefits due to confusion or fear of paperwork. By removing that friction, Labor's plan could among the poorest households without incurring unsustainable costs. Predictably, not everyone is applauding. Conservative backbenchers wasted no time attacking the measure, labeling it a backdoor tax and accusing Reeves of misleading the public with the word universal. This is universal in name only, said former Chancellor Nadhim Zahawi. It's a classic bait and switch, handing something out with one hand, snatching it back with the other, all under the cover of tax. Tory MPs argue the threshold of $35,000 is too low, especially as many pensioners rely on private savings or modest investments to supplement their state pension. This could hit the middle class much harder than Labour admits, added Conservative MP Miriam Cates. But Labour strategists appear unfazed. They're betting that voters will appreciate the clarity and simplicity of the scheme, particularly after a winter marred by record energy bills, spiraling food costs, and reduced support for vulnerable households. More than just a cost of living response, the winter fuel plan signals a deeper ideological pivot within Labour's approach to welfare and taxation. Rachel Reeves, a former Bank of England economist, is increasingly viewed as an architect of Labour's fair but firm economic doctrine, one that avoids traditional austerity while recalibrating the tax system to target wealth, not just income. By reclaiming benefits from high earners after the fact, Reeves effectively dodges the bureaucratic overhead of means testing and the political cost of taking benefits away from pensioners up front. It's a move that seems tailor-made for an electorate wary of both handouts and hardship. Critics on the left have cautiously welcomed the plan, though some say it doesn't go far enough. The universal principle is a good one, but $35,000 is hardly a fortune, said Greenment Caroline Lucas. We need to do more to protect low-income households from energy poverty, not just adjust the margins. Labour insiders, however, see this $35,000 figure as strategically chosen, high enough to shield most pensioners from tax clawbacks, low enough to extract meaningful revenue from the wealthier few. Sources close to the Treasury say that nearly 90% of pensioners will retain the full benefit, with the remaining 10% of effectively repaying it through the tax system, though the exact mechanics are still being worked out in consultation with Hemrart.